All right, let's look at the market review on XAU, the way it has been moving since yesterday. First things first, go to your daily time frame and you see what is happening exactly on this particular pair. Where is the market coming from? Where is the market reacting from? Now you can see the market has been reacting from this demand zone for days now. On daily time frame, market has been reacting on this demand zone for how many days? We start to so since almost 29 days, market has been reacting on this demand zone. The market came close to this demand zone, gave an general liquidity, came back and took out this low, swept the low here. This daily time frame, rather, pushed up, broke the structure. As we can see, market came back to fill the remaining gap. But you can see this particular low is protected. Market did not break through it before going on this move now, this buy move that is currently happening. So where the next zone market is likely to reach? Market has reached the first zone. This is the first high. First liquidity zone. This is the second zone. So from daily, basically, the market is buying from daily time frame. So this is 4 hours. If I will mark out our structure again, let's break to the downside. Finally, market broke to the upside. We take our gun box to the highest point so far. You can also see the market reacted on the equilibrium level here before pushing up. This equilibrium level. There was a reaction before the market pushed up. So on these 4 hours, we're going to be marking out the major zones markets might likely come to. We have one. We have two zones here. So these are the two zones markets can likely drop to give us a zone, give us a confirmation and push up. So these two areas. Let's go lower to 1 hour. Before then, there's the second break. Market has taken out this liquidity. So basically we should sell a little bit before we push up. But you all know how gold moves. If the bullish move starts, it starts. So this 1 hour. So let's see what the gold market has been doing for the past 1 hour. Get it slow. Okay. Okay. So this zone is still valid in 1 hour because the market is yet to mitigate any demand here. Market is yet to mitigate any demand at this zone. We also run it. We also see that this is also within the discount zone. So after this break, market did not come back to make this move an efficient bullish move. Rather, kept on going from the 50% here. Have another break. After this break, we had another break here, which was efficient. So remember, this area was the first demand zone we marked on 4 hours. So we are getting a more better confirmation here. This zone can act as our inducement. We have two demand zones here. We have one. So two. So run through to use some indicators. Use some indicators to separate the right demand zone. That is one. Also use our tool here. So every demand zone here is within the discount zone also. So this is the major demand zone area that we'll be looking for. So basically, we are going to be looking at two zones here. So if you're trading based on demand zone, order block, the two zones we're looking at is here and here, which is what are the level? 4061.71 and 4044.61 zone. And the second zone is 4011.42 and 3998.56. So this zone and this zone, if you're trading based on demand zone, but we know that gold loves flip zone, especially flip zones that occur with fair value gap. By flip zone, I mean, this is what I mean. Markets push up, push down. The fair zone fails, market push down, then breaks through. So most of the time, if this zone has a massive fair value gap from the first fair zone to the second fair zone, if there's a fair value gap here, gold usually play through the fair value gap, which always aligns with the flip zone. This either this zone or the first zone that fails. So it's basically in between. So gold usually, especially when there is an engineer liquidity before these moves, like market try to push into this zone and fails and start pushing up, market usually falls back to the flip zone, gives a little confirmation, sometimes without confirmation, and moves. So those persons now waiting for the demand zone to fill, we end up missing entry. The flip zones are usually a low, like it's a low probability, so you know how to manage your risk. For example, you can say this major move here, this first zone fails to break this high, market starts dropping, take out this low and everything. So you can see there's a flip zone here. Most of the times, you also use your line tool to detect the right flip zone. Good. Use your line tool. This market can be very manipulative sometimes. So this is a flip zone. So God can likely come here and push up. We can also decide to give us what's it called, engineered liquidity along this zone and push up. These are the views I have for gold. So when gold gives this zone, you can find a confirmation and you play. So either this flip zone, one, or this demand, then this. As always, wait for confirmation. If you get a confirmation, then you're good to go. If you get a confirmation, you're good to go. You can see the major zones gold is reacting from now. So, but because gold is reacting from a major daily demand zone, you will focus more on the bullish move than the bearish move, unless the market news says otherwise, Trump and the rest. You see there is a little supply zone here that gold is reacting to. So basically, it will be a reaction. But this reaction can push down to give us the entry we want. I also know that gold loves fair value gap also. So this particular flip zone has a fair value gap and a massive demand candle. So basically, this is the first zone I'm rooting for gold to come. Once gold comes to this zone, then if I see a confirmation, say USD, any confirmation on 5 minutes, you have to be very cautious with the way you navigate through your time frames. So when gold comes to your demand area, go to your 5 minutes or 15 minutes for confirmation, and you're good to go. So you might not. This is just the part in which I think gold will play with today. So you have to just be patient and see how the market moves. If this feels on gold keeps on going and forms another opportunity, you should be able to see it based on this pattern now. But this is the only reason we're looking up for gold.